So, we have now what? The second entry on the income statement. First entry, beginning, finished goods, inventory, and then plus, meaning we have to add the cost of goods manufactured, the amount, which are what? Labor, equipment, and overhead. No? So what is the amount? According to the example, from the example, the amount is 234, 150. Take a look. I am writing it down. The same line, the same line, 2 and 1 on the same line. Because 0 and 5 on the same line, 0, 0 on the same line. And also, 4 and 4, the same line. 1 and 3, the same line. Okay? So, we must do it like this. Okay? Okay? Okay. So, the third line is the subtotal. Okay? So, what is the subtotal? Goods available for sale. Goods available for sale. Which is, you have to add these two. So take note, there is no peso symbol here. You have to use the peso symbol here because this is subtotal. What is the amount? 248. 248, and again, the comma must be in line. And 350. 350. All the digits are in line. All the digits here are in line. So that is the correct way of recording under the accounting principle. Okay. So when you are recording differently from this, that is not a suggested practice of accounting. Okay. But anyway, there are recording that are not in error, but still it's not a model practice. Okay. What is the fourth? Support line minus. So write the negative on the same line here. Same line. Ending. Finished goods inventory. Finished goods. Inventory. Okay. Ending finished goods inventory. How much? What is that? Ending finished goods inventory is negative. Must be subtracted. So that must be inside the parentheses. So that is 12,100. So it means it is negative. That is what we mean by parentheses. Take note, another accounting rule. Those numbers inside the parentheses are reflective of their negative sign. So 248, 350 plus negative magiging minus. So must be subtracted. And the last line is what? Equals cost of goods sold. Actually, this is the subtitle, no? This is the title of the account name, no? And that is equal to this. Cost of goods sold, cost of goods sold. Okay? So, the subtitle must be the same. Okay? On the last line under the what? The indented group of accounts. Okay. So, these are the indented group of accounts. 1, 2, 3, 4, 5. So, this is the fifth one. And this is what? The overall total. So, you have to 200.
1,200.
236,250.
250. So, you have to use peso sign. And also, you have to use double line. So, that is the correct way of writing it down. Okay? Take note. Okay? The only difference in merchandising company is that this account name, which is called cost of goods manufactured, is actually purchases. Okay? Under merchandising company. What are you purchasing about? You are purchasing what? The packaging materials. Okay? You are purchasing the packaging materials because you are what? Retailing the sugar. Okay? Okay, you are buying 1 sack of sugar, then you are retailing per kilo. You need so much of packaging material. There are merchandising that do not need packaging. For example, if you buy, okay, for example, if you buy this one, okay, wholesale, okay, one carton of this food, okay, crackers, no, 1 carton of this. You don't need anything. You just have to resell it by opening it. You don't need to buy anything. So there is no plus purchases. And there is no cost of goods manufactured. You are just what? Buying and selling, literally. No? Buying in wholesale, retailing. After what? Okay? So, therefore, it depends. It depends on the business. No? Depends on the business. Really, but that is the format. This is the format. So, therefore, the green portion here, plus purchases could be equal to 0. Okay? If you are what? Retailing sunflower crackers. Okay? So, 0. Could be 0. But the format is still the same. Format is still the same. Okay? So, let's hear from you if you have any question. Okay? Just practice writing it properly and legibly, clearly, cleanly, and with good penmanship. No? Let us go to the next example. Okay, this is a formula. No? This is a formula. Okay. So beginning balance plus addition to inventory equals ending balance. Okay? Plus withdrawals from inventory. So inventory meaning you have a storage area, you have a warehousing area. Okay? When you are not buying one sack of sugar, but for example, you are buying 100 sacks of sugar every month and retailing it per kilo. But 100 sacks of sugar would require you certain space, no? For its storage, proper storage. Okay? So, unlike if you are just buying what? One sack per month, for example. Okay? That is a different story. So, that's why you have what? Additional expenses. So, take note, beginning balance, meaning every month, for example, you have to record how much is your inventory. Okay? How much, for example, you have what? Sari-sari store. Small sari-sari store. Okay? Beginning of each month, for example, March 1, you have to record how much is your goods available for sale. That is your beginning balance. Okay? That's your beginning balance. If you are what? If you are merchandising company, because sari-sari store, small sari-sari store is just a what? Merchandising application. So, you have to what? To look and compute all of the products inside your sari-sari store. Okay? That's why sometimes those sari-sari store will not do it per month. Sometimes they are doing it every 3 months. Okay? Because it is so much of a work. So much work if you are doing it per month. So sometimes they are doing it every 3 months. Others are doing it every 6 months. And it could be done like that. And also, sometimes others are doing it per year. What is the difference? Okay? If you are doing it per month, obviously, mahuhuli mo lahat ng nangungupit sa'yo. Or, kung may nangungupit man sa'yo, malalaman mo kaagad-agad. Imagine if you are not aware for the whole year that there is somebody, one of your helpers is taking out some of the goods secretly, okay? Secretly, without you being aware of it. So what will happen? A big loss for the whole year. But if you are counting your products every month, okay, you can immediately caught up with the bad helper. Okay, okay, you will not suffer a bigger loss. Okay, however, you will not suffer a bigger loss, but you are suffering what? A lot of work because you are doing it monthly. A lot of work. But if you are doing it per year, it is also acceptable. It is also acceptable, but the risk of somebody taking advantage of you, okay, without you even knowing it, is high, very high. There's a very high risk of that. No? So imagine, for example, one of your helper is taking your product about 2,000 per month. Okay? So in 1 year, that is 24,000 already. Okay? So that's a big amount, really. So that is the risk of not having to do it more frequently. That's why some businesses are doing it frequently, some are not. So you have to decide. The owner have to decide. Okay? The owner have to decide. So that's the important thing. And it is not possible to do it every 2 years. That is not possible because we are going to submit our record to the BIR per year. So either you can do it monthly, you can do it every 2 months, you can do it every 3 months, you can do it every 6 months, you can do it per year, but not more than that. That is not allowed. Okay. So addition to inventory. For example, you are doing it monthly. You have to compute all of the products. So I will what? For example, this one. I will take a look at the cost of this. How much is this? And then record and compute all of your product. Compute, add them up. Adding them up together, you will have the beginning balance. March 1. Okay, then if you buy raw materials or buy wholesale quantities of crackers again within March, within the same month, you have to record addition to inventory here. Okay? So you still have to record and add to the beginning balance. For example, your beginning balance is 12,000 total amount of products that could be sold, and you buy another carton of crackers for 3,000. So 12,000 plus 3,000, you have what? Equals to 15,000. Okay? As your ending balance, if you do not have any withdrawals from inventory. Okay? What do you mean by withdrawals from inventory? For example, you have to what? Record how many times you what? You withdraw from your crackers for your own consumption. Your own consumption is what we call withdrawal. Okay? You are getting products from your storage area, from your inventory, not for selling purposes, but for your own use. Okay? You want to eat. You want to eat. And because you want to eat, so the owner wants to eat, and then therefore, the owner have to record it as withdrawal from inventory. Okay, for example, for the whole month of March, I ate an amount of equal to 500 pesos. So therefore, my ending balance here is not equal to 15,000. My ending balance is 14,500 plus my withdrawal, which is 500, which is total 15,000. Okay? Is it clear? Okay? Is it clear?
Clear.
Yes po, sir.
12,000 plus
Yes po.
3,000 is equal to 14,500 plus 500. Okay? So that is how we use this in real life. Okay? In real life. So let us continue to the next formula. Okay, we have what? Okay, problem solving. Okay. If your inventory balance at the beginning of the month, okay, we will going to use the formula we just explained. Okay. Your okay. We have a problem at 5 minutes 40 seconds. Okay, problem at 5 minutes 40 seconds. of what? Of video number 15. Okay? So, solution. Solution. How to solve this? What are the given? Beginning balance 1,000.
3,200, sir.
Beginning balance is equal to 1,000. Okay. You bought 100 during the month. Meaning to say plus purchases. Okay. Plus purchases 100. Okay. And sold 300 during the month. What would be the balance at the end of the month? Okay. So what will happen?
Sir, 1,200. Sagot.
Okay. So you are able to sell 300. So that is minus, no? Minus sold. Okay, sold 300. Okay. So this is what? Okay. So there are somebody who is answering 1,200. So there's somebody who is answering
800
1,200.
pala, sir. 800.
Oh. That's why I am telling you, okay? Because 1,000 plus 100 minus 300. Okay? Minus 300. Because of the formula. Because of the formula. Okay? Selling it or eating it is the same because those are what? Withdrawal. You withdraw. You withdraw a product amounting to 300. You withdraw. So that is negative. So if you total this out, the answer is 800. Okay? See? It seems very simple. Okay? It seems very simple, but you can commit mistakes. Okay? This is the ending balance. Ending balance. Okay? That's how you record it. That's how you record it. Okay? Ending balance or ending inventory. So at the end of the month, the total amount of products in your storage area is about 800. Okay? That is how we do it. Okay? Think properly. Think properly. Very easy to understand. You have beginning balance. You have to add all the purchases. If you buy something, you have to add. Therefore, the reverse is negative because you have to subtract because you are selling. Purchasing and selling are opposite. So, positive, negative are opposite. Okay? Okay? That's how you do it. So, 1,200. How did you come up with that? 300 minus 100, 200. 200 plus 1,000, 1,200. That is the wrong answer. Okay? Okay, this is the correct way of doing it. Next video. Let's go to the next. Schedule of cost goods manufactured. Okay, so we have the following recording. Okay. We are now what? part of income statement. This is again part of income statement. This is again a format. Okay. Schedule of cost of goods manufactured. Where is that? Here. Cost of goods manufactured. This portion, 234,150. This portion is just a summary. This is a summary. How to compute 234,150. This is how to compute in your screen. This is how you compute. This is the format to compute. Okay? Okay, so one component of cost of goods manufactured is what? Raw materials used. Okay, if you use the raw material, where it will go? Where it will go? It will go to the manufacturing of goods. Okay, you use it to manufacturing. So that means your raw material used in production. One component of cost of goods manufactured is raw materials used. Okay, that is one component. Take note of that. These are all logical. These are all logical. Okay. How much is inside your store? 1,000. You buy wholesale 100. So 1,100. You sell 300. This is very logical, basic. Okay. If you cannot do it, how can you what? How can you put up a small business? Okay. If you cannot logically think about this. I am doing this in order to what? To confirm. Just in order to confirm, because a small sari-sari store owner knows about this. Probably know it in Tagalog words, not in English technical terms. We are using the technical terms, but the important thing is the principle. Okay? The principle remains the same. So let's continue with the format. Okay. So manufacturing cost. Take note. There are three components of manufacturing cost. Direct materials, that is coming from what? Raw materials used. Okay? From the previous screen, no? Okay? Then we have the next one, which is direct labor, and we have the overhead. I am always repeatedly saying this. Okay? Labor, materials, or equipment. Okay? If you are using equipment, equipment is also either overhead or material. Okay, so there are only three things included in manufacturing cost. Again, manufacturing cost is cost of goods manufactured. This one. How to compute this one? How did we arrive at this amount? How did we arrive at this amount? This is how we arrive at that amount. We computed raw materials used from this format. How? Beginning raw materials, purchase raw material, withdrawn raw material, then what? Raw material used. That is the direct materials. Okay? Then calculate all the labor cost. Okay? And then calculate all the manufacturing overhead, and then total these three. You have the total manufacturing cost. Okay? So let us proceed. Okay, what is the next? What is the next formula? Okay, here. Okay. Cost of goods manufactured. Okay. So from manufacturing cost, okay, take a look. Manufacturing cost. Manufacturing cost. Where do we need the total manufacturing cost? Here, total manufacturing cost. Okay, we need it to be added to the beginning work in process inventory. Okay, then we will have what? Total work in process, then ending work in process, then we have the goods. So there are a lot of things going on inside computation of cost of goods manufactured. Okay. Okay. You need this 3 plus the inventory. What do you need the inventory for? Ending inventory and beginning inventory. That's all. So beginning inventory plus total manufacturing cost, you have what? Total work in process. Then minus the ending inventory, you can have the cost of goods manufactured. So that's how we compute cost of goods manufactured. After you computed it, you have to add this amount to the beginning finished goods inventory. Okay? Okay? Cost of goods manufactured, meaning the goods is now finished product. That's why you have to add it to the inventory of all the finished goods. Okay? That means you have to add. No? Because they are all available for sale. That's why if you total it, if you added it, the total is goods available for sale. Because both of them are already finished goods. Okay? Minus the ending inventory. Therefore, you have the cost of goods sold on that month. Okay? That's how we do it. Okay? Okay, next. Okay. So the same explanation here. The same explanation. You have cost of goods manufactured. This is it. Okay. So therefore, as I am telling you, the income statement is a complex report which involves cost of goods sold. And doing the cost of goods sold would involve these things. Inventory, it is very hard to compute the beginning inventory because you are computing all the products available for sale inside your sari-sari store. And then add your goods manufactured. Okay. And then you can get your cost of goods sold after you subtracted the ending finished goods inventory. Oh, the same thing here. The same format here. Exactly the same. Okay. So these are all explanation and we have problem solving here. Problem solving. Okay, let us again go to problem solving. This is problem at timestamp 10 minutes 54 seconds of video number 16. Okay, solution. Okay. Solution. Given beginning raw materials inventory. So beginning. Okay, write it down. Beginning raw. It is important to say it raw material because there are 3 types of material. Raw material. There are 3 types of material. Raw material, work in process, and finished goods. So those are the three types of material. Raw material, again, work in process, and finished goods. So those are the three types of material. So that's why you have to say what type of material is your inventory.